Hello and welcome back to Bunnex Investment Group. In this video, simplifying how you will count levels. So if you watch this up to the end, you will definitely see how you can count levels with ease. So without wasting much of our time, let's actually jump into the video. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. So counting of levels is a little bit subjective to several traders. By that we mean if I count my levels, they are likely to differ from another trader. So in the courses that we do or the master classes, we actually try to set aside several techniques of how to count levels with ease. So in this particular video, I'm going to simplify for everyone actually going to watch this video. So the normal way of counting levels usually looks at counting of impulses to the upside or to the downside. For instance, these are M15 levels that I'm going to count, whereby I see the first drop, then I see another drop to the downside, and then lastly I see the last drop. At level 3, we expect to see the market to reverse, and that is where our peak formation low trades come from. So they actually come from a completed cycle. As you can see, we had 1, 2, and 3, and at these zones, that is where we were looking to get buys that actually manifested. So you may actually find yourself facing difficulties to actually see these impulses to the downside or impulses to the upside. And this is what this video is all about, to simplify that. And we are not saying to guarantee how to see the end of cycles, but we are saying simplifying. It means if we are simplifying something, we have something that we know about that particular concept. So this is going to employ what we call the zigzag indicator. It's actually a custom indicator that usually comes with all MT4 platforms when you download them. So basically we are going to go on indicators, go on custom, then after going on custom, it's actually the last indicator, mostly by default because of its name. So if we employ the zigzag indicator, this is how it looks like. It actually plots the highs and lows on our charts. And after plotting those highs and lows, what we will be basically doing is actually to see the high and breaking of the low of the previous impulse. As you can see, this one is a level that we constructed manually, and after constructing it manually, we can see some consolidation and then a drop that has been issued, pull back, some consolidation and a drop. So what you have to look at, or what you have to watch out for, is to see these lows being broken as we will be going downwards, or validating the lines that have been constructed by the zigzag indicator. So let's now have some examples of how this can simplify how we count our levels. So I've already made a template having this zigzag indicator, so that I'll have this setting whereby the line has been thickened and is purely visible to everyone. So this is basically the example on Euro USD, whereby we can see a line that has been constructed showing us an impulse to the downside, and then we can see that impulse being broken with this line. Therefore, a line that breaks the law of the previous impulse is valid to be a level. So we had level 1 consolidation, and then level 2, and after that we had the last level to the downside, like that. And we have a completed cycle, and after a completed cycle we wait to see a reversal. So in this particular case, we have another case whereby we have these two equal highs that have been set, and after that we can see a line and another line that is still being constructed, and we'll be expecting to see the last level to the downside for us to get an entry as a buy trade. Another example is on EuroCAD, and on EuroCAD what we have seen is we have some consolidation, and these consolidation are out of our scope. You can even black them out so that you won't get confused where the zigzag wasn't giving an impulse. So in this particular case, there was no impulse, or there was no downward move. And then in this particular case, there were also consolidations, but we have a clear line to the downside, then another clear line to the downside, and a consolidation to the downside again. Therefore, we had 1, 2, and 3 levels to the downside. This actually occurred on Friday, since we are now in a new week, and our targets should be at the 200 EMA. Unfortunately, I do not have the 200 EMA available on the chart right now for reasons of clear explanation of this technique. Then another example is on USD MXN. USD MXN actually gave us a trade using this particular trade technique for today, and the 200 EMA was around this point. You can as well check it out on the 2nd of May to see where the 200 EMA was. We can see there was consolidation, but there was this strong impulse. Pull back, another strong impulse. Pull back, another strong impulse, and minding breaking the law of the previous impulses. That is where you validate a level, and after that, that is where we were now looking for a pattern for us to go long to the 200 EMA like that. So basically, it's actually putting the zigzag indicator and your 200 EMA for targets, and actually trying to get entries at the 3rd level or at the end of the 3rd level. Basically, this indicator simplifies how you would see the stuff. It's something that will actually remove the stress or remove the much of the subjectivity of this particular concept. On that note, we come to the end of our video. Thank you for watching. Like and subscribe, and I'll see you on the next one.